Hello and welcome to another weekly video with myself, Sam Volkering, and my friend and colleague, Nick Hubble. I think we skipped 1 week. I wasn't feeling crash hot last week, getting over that. Voice disappeared. Kids, I think, stole it from me. Happened to also now be at home sick, so that kind of makes a lot of sense. But Nick, thanks for joining me this week.
It's good to be with you, and I'm happy that your kids got a bit of karma in the end after infecting you.
Yeah, it is a bit like that, isn't it? It's like, haha, except now they're at home annoying the crap out of me. So
Oh no.
anyway, it's all good. I love them. They're great. And what our viewers might notice is a little paint swatch here over my shoulder because my wife decided that it was time to repaint the office. So there's a bit of actually this office is an outright mess because I'm going through a massive change of desk and I've got a giant desk on order. It's a 2.4 meter giant. So a lot of things happening. Paint. It's all going on in the Volkering household. Anyway, we are not here to talk about my home DIY projects, Nick. We are here to talk about. I think you coined you. What did you just say to me before we jumped on air?
The earnings extravaganza. I was just looking
Earnings
for alliteration.
extravaganza. It's earnings season. How good? How much fun's earnings season? It's just companies smashing earnings results, and then falling in price the next day. It's like the markets. It's a wonderful thing. Where should we start, Nick? Where would you like to start? Should we start with SpaceX? Should we start with AMD? Should we talk oil? I'm gonna leave it up to you to decide where you want to kick off today.
Well, let's debate whether earnings season matters because there's sort of two schools of thought, right? There's the
Mm.
idea that this is just a short-term quarterly thing. You don't really need to worry about it. There's a lot of accounting shenanigans that companies can do to manipulate these figures. It doesn't really mean much in the end. Give me what's the response? What's the counter argument? I don't know which side of the argument you're actually on personally, but I
Well, I
framed
come
you
in and
now.
out. I come in and out of it because with earnings season, it's one of those things, right, where there are expectations that are set by Wall Street, whoever these analysts and earnings expectors are, and they're always low. But even then, sometimes they're really high, and it's like, well, where do you set the bar? Where do you really set the bar? Because most companies give the forward guidance is almost more important than the actual earnings result itself. And that's kind of where they find out what their expectations are. But like you look at something like SpaceX, and I think they did something like 7.5, almost 8 billion in revenue. It was 2.5 billion from XAI, 2.5 billion from what are the other companies do? Starlink,
Darling.
and then about almost 1 billion from SpaceX itself. And they beat earnings expectations, and the stock is tanking. It was down like 8 or 9% off the back. So like the earnings were good, not for a $1.5 trillion company. The earnings beat expectations. So if the expectations were beating the stock, like what is the point? I come in and out. I think quarterly, and there was a move, wasn't there? I think there
Yeah,
was a
Trump.
suggestion recently to get rid of quarterly earnings from
Yeah.
Trump, wasn't it?
Yep, that's right. And yeah, he was making these same arguments, and the supporters of this were saying, it's just an accounting shenanigans exercise. It's about something that's already happened in the past. It's a quarter from months ago. So,
Feels like
what?
it's more almost for bots and for algorithmic trading than it is for the actual market itself.
Yeah, I agree. And also it's about justifying all these Wall Street jobs where people are just copy pasting information out of annual reports and making forecasts for something that's already happened in the past. I mean, it's a bit bizarre. Imagine if you and I wrote about something all day long that's happened a few months ago. It's just
I think the other thing as well is that it's almost an excuse for the market to continue to maintain its current sentiment state. So if there's a lot of fear around things like an AI bubble, which there is right now, and then Amazon comes out and says, well, you know what, we're jacking up our capex, our capital expenditure by another 20 billion to 220 billion. And then the market just goes, ha ha, I told you so. They're just pissing money against the wall and it's never going to pay off. And it's like, well, hang on a minute. There's a reason why they're bumping it up by 20 billion, and you're way overreacting. And it's like, it's never going to pay off. It's like, yeah, it's absolutely, they literally told us in 12 to 24 months, it's going to pay off. Like, why are we still fearful about a company that makes cash hand over fist, spending money hand over fist to build out the next 15 to 30 years of its free cash flow? I mean, it seems like, and then when you see these announcements and an earnings announcement drops, and the instant it drops, not like a minute later, not 2 minutes or 5 minutes later, the instant these things come out, the stock price moves, and it often moves lower. And that's algorithmic trading. That's bots. That's not people. So
yeah, and they've often pre-programmed their trades to be triggered in that way. And there's a big industry in all of this, in the various forms of front running, which is hundreds of years old. Right? I'm trying to think of the Rothschilds with their pigeons, and Elizabeth Cox, our co-editor, wrote about this beautifully a few weeks ago, where she was talking about the earliest forms of trying to get information flows to get faster and faster to try and front run the impact on the market. This is just the latest example of that, except we're down to like milliseconds at this point.
well, yes, and actually, you know what? I hadn't sort of planned to go down this tangent, but you mentioned faster and faster and speed of information. One of the things that this week, just in the last couple of days, so if anyone was watching the market on Tuesday and Wednesday, you would have seen a bit of a pump in optics and photonics stocks related to the AI trade, because the idea of data and information moving faster happens to be faster when you're using photonics, i.e. light. So there was a big shift in these stocks because there was rumors that the Trump administration was going to come out and basically prevent overseas companies from products into AI around photonics. So all the US domestic players, so like Coherent and Lumentum, skyrocketed. And then InnoLight, which is an overseas, Chinese, I think, manufacturer, went the other way. So that's drones, I believe now, networking, potentially photonics, where the Trump administration and the various US organizations are saying, the reports you see say China, a ban on China. It's a little bit more nuanced than that. It's usually it's from overseas companies, so that includes China, and it's kind of saying China without saying China. Do you think, Nick, that there are other things that the Trump administration is ready to put some brakes on and say, you know what, we don't want that coming from overseas, China. We want it coming from the US. And where, if that's the case, are there some opportunities maybe in the market for potential overseas bans where the domestic stuff goes that way?
We've exhausted my list of things that the government might want to subsidize / tariff the competitors of, the rare earths and the energies, and shipping recently, actually, interesting one. But what I want to point out here is fascinating, which is that the difficulty of actually achieving this. In the first hand, you're thereby reducing competition in the industry, so you're leaving yourself with higher costs. But more interestingly, do you remember during the tariff drama, the tariff tantrum in April, we had this weird story about Trump deciding to tariff, I think it was Antarctic islands or something like that, and were inhabited by nothing but penguins.
Oh, the penguin, the penguin joint.
Yeah. And of course, everyone laughed at him. And the idea was that actually, it turned out later on, according to some analysis by a trade expert, that countries commonly circumvent each other's tariffs by trading via other locations. And this particular island, featuring nothing but a penguin colony, had actually featured some major trading. I think it was something to do with copper or electric infrastructure of some sort. It had actually been traded via this island, and thereby it had gotten around tariffs. And so my point being that Trump, in order to build tariff walls or national security-based walls for imports of key strategic goods, he can't just ban China for legal reasons as well. But more interestingly, he can't just ban some countries, not others, because the international trading system is too complex and too flexible for what gets rerouted where, what gets assembled where, what gets manufactured where. And in the end, you're impossibility, a bit of possibility of actually making this effective, unless you really shut up, shop. You really raise the walls. And I don't think he can do that without doing massive damage to his economy, even in the medium term. So I would worry about whether this strategy is going to work and last, especially given the costs, the difficulties, the impossibility in the long run. So I'd be very wary about buying and holding these stocks that are spiking based on the short-term geopolitical shifts, especially with the midterms coming, especially with Trump only having the one term this time round. These are trades, not long-term investments, as far as I'm concerned. As soon as the Democrats get back in, it'll all shift back to pro-China and whatnot. So while these opportunities have been fascinating to write about and to highlight, I think that period may be coming to an end in the next 2 years. And personally, my investment horizon will be longer than that. So I would caution people about trying to trade these tariff moves. We had actually an interesting editorial meeting with our Australian colleagues for our Australian business a few days ago, and we talked about a related issue, which is whether these types of attacks from Trump make any sense. What's logic? But what's the logic behind them? He seems a bit unhinged, but he's consistently been that way. And so, betting on American economic tariff policy, trade policy, continuing to be exerted in an unhinged way is a bit of an iffy bet.
Speaking of things that are said to happen and then never end up happening, we may as well move on to talk about the Strait of Hormuz and oil. A deal. I saw Scott. I was watching CNBC this morning. This is just as I tend to occasionally do. I just want a morning coffee and not have to think too hard. And Scott Percent was on there talking about a deal is imminent again with Iran. What is this, the 9th, 10th, 12th deal? I'm not sure. But the oil price went pew, straight down. Is this? I mean, you and I have spoken about the supply and stores of oil, and it's still a big issue. And yet the price just doesn't want to reflect that. It cheap oil looks like it's here to stay. Is that the case? What's going on here, mate?
Well, what we have now that we've seen the earnings from the oil companies is an interesting piece of information, which is that they seem to benefit from volatility in and of itself. So oil companies now and gas companies have massive trading divisions, which benefit from volatility in prices because they're able to, withhold supply and then release it when prices are high, and trade arbitrage, which happens when there's disruption. So the oil companies are quite clearly benefiting on a net basis from all this toing and froing. But what's going on underneath, I think, is the bigger topic here, which is that the oil storage is being depleted. There's not enough gas. Everyone's punting on the availability of other people's energy, but they're all punting on the same bits of energy that cannot be distributed, given what's missing. So I think there's going to be an uptrend in oil after the initial shock of an actual peace deal comes, if it does come, because we're going to have to try and figure out where all this missing supply is. So I'm definitely staying very much long fossil fuel energy companies in the Fleet Street letter. Obviously, we can't reveal which one, but we did talk about one in our YouTube live a few weeks ago. I think it was 3 weeks ago. And we recommended that subscribers and viewers of that video take a look at it. And it's done really well until, of course, this overnight latest slam of the oil price. Nevertheless, the stock's done really well since then. So it's a good example of what happens when you ignore the volatility or when you invest in something that benefits from volatility.
Yeah, absolutely. We also spoke about the AI trade and one of the big companies involved in that and around the build out of their AI factories and data centers, which has also done very well since. And that's I think you made a very good point there. Is that what's very exciting and very interesting about the markets, and especially around earnings season, is that volatility is amplified. And many stocks, even large caps, Amazon was up 15, 16, 17% in a day.
And it was followed by another up day of a few percent more, which is unusual.
Exactly.
Usually when big moves happen in big caps, they sort of halfway reverse the next day.
And big caps is underselling it. We're talking giga caps. I can't even think of another adjective to describe it. But when you're looking at a multi-trillion-dollar company that's shifting 15 odd % in a day's trade, it's trading like a meme stock. It's like that sort of volatility is crazy. And the whole AI trade after the massive sell-off in it in the weeks prior all of a sudden has a big bounce and a big reversal, because the underlying view of the long term is that none of this is slowing down. Like, if for anybody that tuned into the SpaceX earnings release, Elon spoke very highly about Nvidia and what they're doing, and their exclusive partnership, if you will, exclusive supply of Nvidia, purchasing of Nvidia GPUs, their intent to put those into AI data centers in orbit, ultimately probably on Mars. But when he spoke about that, he spoke about the fact that there was just not enough memory. And I've spoken about this and written about this for well over a year and a half, probably 2 years, probably even longer, that these sorts of supply-demand imbalances, particularly around the building blocks of technology around storage, memory, compute, connectivity, all of these things, it's like the demand, what we've seen historically, the demand for oil is that just continues to increase. And when you have a demand that continues to increase and a supply that just can't keep up, and it may not be able to keep up for 3 or 4 or 5 years. And even then, it's only just going to barely keep up. You kind of have to go down that picks and shovels road and say, well, where is the long-term opportunity? And with volatility in the market on quarterly earnings, when AMD drops, almost double digits off the back of an unbelievable quarter, you kind of have to look at that and go, maybe that's a really good chance to just accumulate or build a position when you've got your eye on the long term. So I think that's a really important takeaway, be it whether you're looking at, like you say, around the oil trade or be around the AI trade. You can get very easily caught up in the volatility and the swings. But if you've got one eye on the longer prize, I think there's just a lot of opportunity in the market, regardless of what you like. Sorry, continue, please.
That might be the key point of this video, that the volatility in the short term on these earnings releases can be irrational. But that means it's a buying opportunity to deploy more of your capital. Most of us invest slowly, gradually over long periods of time based on our income. So you're always looking for buying opportunities, small ones along the way, to nibble at these stocks that you like. And so if they have a massive irrational reaction to an earnings release, first of all, you've got some iffy confirmation that at least the company's doing okay, as much as it may be manipulation of accounting. Nevertheless, if the stock just absolutely tanks, as many of the tech stocks did in response, then it's a good opportunity to buy into those. Compared to the alternative, when there's been no particular news or no particular irrational reaction to something, that's when I guess there's a good opportunity.
Absolutely. That'll do for this week. We'll try and keep these things nice and succinct as possibly as we can. Thank you very much, Nick, for your insight and expertise. Thank you, everybody, for tuning in and joining us this week. And we will be back with you again next week to talk about something else. If you've got any suggestions, write in, let us know. feedback@southbankresearch.com. Or if you're watching this eventually on YouTube, leave a comment. Let us know what you think about this video and perhaps what you'd like us to talk about in future videos. But that's all for this week. Thanks for watching, and bye for now.